You're watching Beyond Market. Welcome. I'm Esther Awoniyi. On today's show, we'll discuss gold refining in Nigeria. As always, you can join the conversation with the hashtag Beyond Market, and you can also follow my Twitter handle too at Esther Awoniyi. Now, as Nigeria looks to deepen its gold industry, the government has stepped up its cooperation with Dubai following President Buhari's visit to the country earlier this year. However, the Environmental Law Institute says Nigeria does not have a well-developed large-scale mining sector, and the majority of gold mining in the country is carried out by artisanal and small-scale miners, unlike countries like Ghana and Burkina Faso. Nere Teriba, Vice Chairman of Kian Smith Trading Company, joins me for today's discussion. Thank you, Nere. It's a pleasure to have you on the show today.
Thank you, Esther.
So let's talk about, before we, I want you to paint a picture of gold mining, gold refining in Nigeria and by extension West Africa, because we're talking earlier about how whenever I have conversations about gold mining, it's usually the illegal gold mining, how people come into the country, or especially in the informal sector, etc. But just give us a picture of, in terms of what Nigeria produces and who's mining the gold.
Okay, like you said, unconfirmed, we don't really have confirmed data or about gold production in Nigeria, large production, because a lot of this gold that's been mined or traded is informal. So if you look at Navy or customs or even the ministry, they'll probably have divergent reports, but very insignificant amounts. However, for us in our network, we are sure from the relationship we have with artisanal miners and our own data, there's probably at least 2 tons of gold per month from enough artisanal miners that we are aware of in the network that's been mined, at least. Now, yes, the space is mostly predominant, like you said, predominantly artisanal miners, about maybe 90% artisanal miners, they're small-scale miners. There's also a big one now. I think most people are aware of Segilola Gold Project in Osun State, run by Thor Exploration. They're making waves. They're a listed project. I believe they're, up now about 800,000 ounces of gold that have been proven. So yes, we now have a big player for gold, a TSX listed company. So that would change things. Now for the rest of West Africa, as you asked, if you look at West Africa as a whole, we're now an emerging gold producing region in the world. I say emerging, and I look at us as a region because of ECOWAS and proximity and a lot of the geology. So you look at, of the 15 ECOWAS countries, 12 of us are known to have gold reserves. It's just Cape Verde, Togo, and Benin that are not really known as gold producing countries. So you can see the potential when you see all the other countries that are there that are known for gold. Ghana, of course, Cote d'Ivoire, Burkina Faso, Senegal, Niger, so yeah, Sierra Leone, Liberia. So you can see Guinea, you can see really where this is West Africa. But as of last week, Ghana is now #1 producing gold country in Africa. And this is even based on last year's statistics from the World Bank. So clearly you can see that West Africa as a whole is a huge gold producing region. So, but if you look at what you were really asking, you asked another question about Nigeria, the artisanal mining, the space. There's also the potential for better organization. You were talking about the relationship now we have with Dubai, potentially as a country, to foster that relationship with gold. And when you look at this, there's what Kian Smith now is doing with the artisanal miners, which is, yes, they're working on building a gold refinery, but a lot of that needs supply, which is aggregating and organizing the artisanal miners and to supply gold to the refinery. Now, what does this mean? It's not just that we're formalizing them like cooperatives. They have to become businesses. So far, we have done this with about 370 bigger suppliers. Now, we've had to register all of them to be businesses, help them get tax ID numbers. And in the process, you have to realize a lot of these people didn't even have identity cards. So we had to help them get a driver's license or voter ID card. So it's quite a long process of financial inclusion as well, because they also had to get banked, I should say. So we had to help them get banked at least with 2 banks. And because of the kind of volume of transactions they're doing, they also now had to start dealing with the EFCC, anti-money laundering certification. So if you look at the possibility of what this does really for the artisanal miners, the sector and everything, number one, you can see how financial inclusion and so many things are going to change. But back for gold, this now really changes things because you're going to start having a very, very, should I say, secure and transparent system.
Yeah, but if I could come in here, while all of this is happening, you know, with what Kian Smith is doing, organizing the artisanal miners and all of that, but on the regulation, on the regulatory side, I mean, it's still, the market still looks fragmented. There is no structured, thriving value chain. And obviously, there is an thriving underground gold economy, not just in West Africa, even here in Nigeria. So I'm just wondering, what about regulation, ensuring that there is fair play and that, you know, at least, you know, let's know who is in the fault, who is doing it legally and who's doing it illegally? What
I would say is, to be fair to the regulatory framework, there's a very, very good, robust framework for mining. And it's very structured. It's there. I mean, the reforms have happened in the last 10 years. If you look at it, it's on par with what's going on with the rest of the world, really. Okay. However, I will say that in terms of looking at, let's say, gold now, it's now not just about mining policy. When you're talking about the value chain for gold, you have to look at gold beyond mining. This is now looking at gold as investment, gold as jewelry. So in looking at gold in this way, this was something that we got involved in doing with the Economic Recovery Growth Plan, the Focus Labs, and we pushed for a gold policy that had to look at gold and say, first of all, create a framework so that you realize that gold is beyond just a commodity that's mined, you know? So that was looked at, but like you said, yes, a full policy has been drafted, and this was just, like you said, to give everyone fair play and ease, and part of that was how the refinery license was birthed. There was no structure for the value chain in terms of giving licenses for, say, a refinery, a smelter, and all those other things. So I'm just letting you know that at least the license that we have is evidence of the progress that has been made in policy. There are still other things that they're looking at that need to be addressed. For example, with royalty, VAT, and other things. But yes, to answer your question.
Because, I mean, when I was reading up on this, what I found was that for years, you know, billions of dollars have been lost, you know, from a lack of, you know, remittance, you know, the government not getting the royalty due to it.
But that's not because of a lack of policy. I think this is something that we could discuss, actually. That you have to look at, for example, monetary policy. Why is gold smuggled? You look at, for example, Nigeria and the proximity. I think Dangote mentioned something in the news, I think a week or two ago, in, I think it was a forum he was having with the central bank. You have to look at trade. We're next door to Benin and Togo, and they have 0% royalty. We already know that those two countries have very flexible, or should we say permissible, trade policies. Lots of things we know go through those routes. It's the same thing with gold. So if you have these two countries next door who have 0% royalty and not producing, and Nigeria is charging 3% royalty for its gold, and Niger above is 1%, well, this is just regular economics, and then we have open borders, ECOWAS. The gold will go where it's zero.
True. Let's talk about Kian Smith. You're setting up the first gold refinery in Nigeria, in the southwest, Ogun State. Talk to us about it. I mean, how this came about in the first place, what is the installed capacity, and when we expect this to kick off?
Okay. The capacity for the refinery is going to be about 3-ton production of gold per month. This came about, as I alluded to before, we've been playing in this space almost 8 years now. And we're in gold exploration, a little small-scale mining, but we really got involved accidentally with working with the artisanal miners. I'll be honest, you notice I was a little bit protective of them. It was a love-hate relationship. On one hand, they were the pathfinders. I would say a lot of the tenements we found were really because of them. If they hadn't been there, where no one wanted to do the work, we would never have found what we found. However, we also thought then that they were a nuisance because we really couldn't do work. They were there competing with us. But after a while, by the time we just saw, what they do, these people would go down 10 meters into the ground, ingenious ways, just to get gold. And seeing their issues, and after a while, we realized, you know what, we could work with them. Not all of them really wanted to be mining.
Okay.
A lot of them actually are farmers half the time, and this is just something they do to make ends meet. And some of them are even looking for ways out. We're caught in that trap. So eventually we became consultants dealing with artisanal miners, and we ended up even being involved in building mobile technology platforms to get involved in helping bank them. This is how the banking thing came about. So yes, when we saw what they were producing, because our history before we were doing gold, we were doing lead. We used to do lead trading and aggregating the lead market. So we saw the same opportunity to say, if the potential is here, we just need to figure out how do we organize, formalize this opportunity in a way that's a win-win. The government gets what they want. The people who have licenses, who these people may be exploiting without permission, we work with them. I mean, it's a big, it's too complicated. All the people you have to work with diplomatically. But at the end of the day, we thought to ourselves, you know what, we can build a refinery that handles this gold, so that let the gold not be smuggled. We looked at all the dynamics for trade and economics for why the gold is going out of Nigeria, and even realized within the region, we're in a gold producing region, as we alluded to, West Africa. Even if Nigeria doesn't produce enough gold, there's enough gold in West Africa that's walking out. So these were all the reasons for why we ended up on the refinery plan.
And for the regulatory side, Kian Smith, you want to put together a conference, a gathering to bring in private players and especially the government to come talk about how we can strengthen this value chain.
Yes.
Putting proper goal targeted policy in place. Quickly, let's get into that now. Talk to us about this conference and what you're hoping in terms of key outcomes, what those will be.
Okay, so we're having the first Gold West Africa Conference. It's June 25th to 26th in Lagos. And the whole premise of this conference is to say no country in West Africa will be successful in developing its value chain without doing it together. And this is because of what we've said. We have ECOWAS, we have these treaties, but we have divergent policies. And if we are all connected with our borders by land, trade, like we alluded to with Ghana, Ghana is now the biggest gold-producing country in Africa, but they're next door to, I think, Togo. But Togo is a very big exporter of gold, but they're not producing any. That already shows you there are some issues there. The same thing I've said, like, for example, in Nigeria. We tell you we're producing a lot of gold, but we see nothing. Well, we're next door. So when you look at all these things with policy, we have to come together and realize, I was in Burkina Faso several weeks ago, the same thing with the government. They look at this problem and they realize it's something that needs to be addressed. VAT, for example. Burkina has this issue. We will have this issue when we look in the value chain. For example, there's a flat VAT, assumption that once something is traded once, you're going to charge VAT. Well, you can't VAT gold if you've added value to it just because you traded it. So for example, Burkina, if you just trade gold, it attracts 18%. So legally, really, no one's going to buy your gold. The price of gold is regulated, you know what I mean, in London. Sure. You can't VAT it unless it's like jewelry. So there's all these kinds of issues that, because as a region, we've never really looked at it. And also the same thing with monetary policy. Why is gold walking away? Are we considering all these things? Okay. So that's what the conference is about.
Nere, hold that thought for us. We're going to take a short break and come back and pick it from where we left off, especially on the policy side. I've been speaking to Nere Teriba. She's a vice chairman of Kian Smith Trade and Co. We're looking at gold mining and refining in West Africa. Welcome back to Beyond Markets. If you're just joining us, Nere Teriba, Vice Chairman of Kian Smith Trade and Co. is with me today, and we're discussing gold refining in Nigeria. Thank you, Nere, for your time so far. Let's pick up from where we left off, talking regulation. Obviously, the government on its side, is responsible for ensuring that there's, creating that friendly business environment, ensuring that there's implementation of regulation policy is right, especially for the sector. Talk to us more about that, because from mining along production, creating that value chain, how would it work for Nigeria? Where should the government start from a policy side?
Wow. I think I'll say for Nigeria, the mining policy is excellent. It's world class. It's done. What I would say is we need to look now beyond the mining and the value chain, where we just say, like with the processing, which they've started working on. The refinery permits, licenses for smelting, licensing for jewelry production. But I think the bulk emphasis for Nigeria should really be in jewelry. The demand for jewelry from Nigeria, like I said, our company, we do a lot of research on gold within our, but we've been limited. But what we know so far, the amount of gold being purchased, at least in Kano, the Kano markets, you have about 20,000 unique visitors a day just to buy gold jewelry from across West Africa. The potential is huge. From my research, if you go to Italy, if you go to Dubai, if you go to India, they know Nigerians. Okay. When they're talking about Africans coming to buy gold jewelry, we're well known. So you can see that the market, the demand is there. But what's interesting is, I'm sure if you look at, I tried, but I haven't been successful to really find, should I say, strong data through customs or anything that shows you that Nigeria is actually importing jewelry. So when you look at this, you realize that there's a huge underground, probably $1 billion industry for gold jewelry that's underground. We talk about underground gold mining.
That's being formal.
Yes.
So how about, here's my question. How about, still from a policy side, formalizing these small scale, the underground, bringing them out into the formal sector?
I think what I'm saying about policy from mining is fine. It's there. If there's any issue on the policy side, maybe it's enforcement. But I'm saying there's no policy for jewelry.
Okay. Or targeted at gold itself.
Yes, targeted at gold. So that's where I'm saying, if we're talking about policy the government needs to focus on, that would be it. Because if we have such a huge potential to be a Dubai for Africa, and a lot of gold jewelry is coming into Nigeria, probably undocumented, not paying the duties that should be paid, is the issue that the duties are too high. And sometimes, just like with also mining, sometimes it's just been because there hasn't been a company or consulting group to pioneer really looking into these details to say, maybe what needs to be done is a viable case to be made to, to reduce the VAT or reduce what needs to be done. But it is a huge industry, it's a huge potential, and I would say the biggest focus for the government first to be on policy for gold jewelry, production, importation, and all of that. Another thing that the government should probably focus on as well would also be to look at gold and monetary policy.
Okay.
It's hard to guide, but all we would just say is we would invite the central bank and the fiscal committees and co to just take a look overall, look at the world, look at the countries that produce gold, the countries that deal with gold as financial instruments, the issues relating to gold and FX, and make those considerations as well to consider some policy changes.
Are there examples that Nigeria could look to, perhaps even here on the African continent, or maybe outside of the African continent, in terms of how they've been able to put the policy together for gold and that's working?
I could give you different examples. So for example, if you're in, let's say India, the thing that's tricky about India but really unique, India now doesn't really follow London. And that's because the Indian gold economy is so huge, right? They don't really deal with gold pricing in FX. They deal with gold pricing in their own Indian rupees. Okay. And when you're dealing with your gold pricing in your own currency, then quite frankly, this whole monetary policy discussion doesn't matter. So because the Indian economy, they have their own, they're working on an Indian good delivery standard, not even London good delivery, LBMA. They pretty much have become an entity on their own when it comes to gold. So in terms of monetary policy, it doesn't really matter what's going on with London and anyone else. India on its own is consuming so much gold. Gold is being monetized even by farmers. So every family in India has gold. They realize that gold is given to every woman when she's married. It's part of her dowry. So even poor farmers, they bring their gold into the banks. Every bank has, they call them gold monetization schemes. Banks use gold to hold your gold as collateral, to get funds, to get land. So India is a very, very, very unique, powerful economy where gold is concerned that almost works independently of whatever is going on in anybody else's currency. Now, however, if you look at, say, a country like maybe Portugal, when it comes to gold pricing, they have a way of matching both, because they realize, okay, fine, gold is priced in US dollars, what's the price in gold in London? And then they also have their own currency. So there's a way they're balancing and observing the discrepancy to know how they're handling. To say, okay, fine, there's the mint here, this is how transactions are going, who's allowed to sell gold, who's allowed to buy gold. So in a case like Nigeria, where we have such a huge discrepancy, we have so many, well, I shouldn't say so many, we have several exchange rates. We have several exchange rates. The exchange rate between, official or not, between Nigeria, let's say even at best is 300 to $1. Then you have a lot of oil and gas traders. Now you have a lot of oil and gas traders who need gold just to get FX. So now they're one of the biggest buyers of gold locally. And all this because of the monetary policy. Okay. So you begin to have all these things that, like I said, I'm not an economist. I'm in gold. There's things I observe. I can't quite make the best decision. But I do think that if we have more economists in Nigeria who begin to look into these issues, there'll be other considerations made.
As a player, and maybe for the others, have you had the opportunity to engage, with the authorities, the government, in terms of, this is what we want? I mean, now that you're talking about, expanding your diversification agenda, looking at other sectors, gold is viable, there's money in it. I mean, it can be lucrative for the government on the royalties side. Have you had that? Yes,
our focus right now really with the government have been on royalties. And that has been because we've said, look, as a refinery, looking at everything now economically, we say, look, you can't compete with our neighbors next door who are at 0%. This is business. And above, we have 1%. So what we're saying is, look, as a refinery, at least to start, until the government decides how or if they can secure their borders or what they want to do in the future, we're saying, look, the refinery will pay the royalty on behalf of all the artisanal miners. Oh. And not only that, so this way, because part of the government's issue on collecting royalties is the law says you collect royalty from the miners, not the producers. But we're saying as a refinery, you're not going to be able to easily get these miners. We already are working with them, but we're going to collect the royalty on their behalf. But guess what? Make the royalty match 1%, our neighbor Niger. Because that way now, at least we've evened out, the playing field. Because either way, the miner is going to take the gold too. But guess what? So if we're paying 1% on their behalf, like Niger, as far as the miner is concerned, it's like paying 0%. They're paying nothing. So why would they smuggle to Togo and Niger? So now it's a level playing field. Whoever wants to take their gold out, it's fair game. You either take it out because you want to, or you stay here, but not because you're going to get a better deal, really. So this is where we're pushing, and we've made a case for the government. They've looked at it. We've made several cases. It makes sense to them now. So it's just a process that this has to go through.
The body language. What is the body language? Is it one of, yes, okay, we're willing to consider, we're willing to go forward with this?
I think what I'll say with the government, I think the government is looking at two things. They have to decide. They agree with this, but I think the government has their fears. One fear with them is they are so, I think, so far, the way a government naturally looks at things is higher royalties means more revenue. But you have to look at volume. So you say, okay, fine. If you have, presently you're collecting almost 0% royalty at 3%. And we've told you that gold is being smuggled through the borders, but you think you want to hold it at 3% or go up to 5%. Because that's natural thinking. Increase the percentage because you want to collect more revenue. So it's a harder, so they understand what we're saying, that we're saying, look, if you reduce it to 1%, you go from 0% collection, to maybe 40% collection overnight. Okay. So I think for them, those are all the considerations they're looking at. They get it intuitively, okay. But there's different things they have to consider.
And perhaps, with this conference, those issues will be laid bare, and of course, will be made clear. But for Kian Smith, what is your big picture? You're hoping to launch one in the next quarter. What is your big picture? What is your 3-5 year strategy?
So the strategy for us in the next 3 years, we're sure that we're going to expand. We're pretty sure the refinery is going to expand capacity. But beyond the refinery there, we definitely see regional, should we say, processing hubs. We're looking at creating regional processing hubs. We expect or hope that there will be another refinery in the north. It doesn't have to be us. Whoever wants to do that, there's a potential there. But what we realize at the end of the day is that there's a lot of potential for other things. Let me give you something very silly. We look at mine farms, and we realize that, back to what I was saying about ASM, there's definitely very big competing interest for the use of land, whether it's to farm, it's to mine. How do you handle that? Even some of these herdsmen issues are also connected to the whole land use. So in the next 3 years, although we're refining, we're going to be going a lot more into the communities, I should say, and doing more projects there that involve, yes, mining gold, better processing, other ways that increase yield even for farmers using their land, but also mining. So it's things we're working on, we're testing out. So that's going to be more of our focus in the next 3 years.
Okay, Nere, thank you so much. And of course, I wish you all the best with that. Thank you so much for being on the show today.
Thank you.
I've been speaking to Nere Teriba. She's the Vice Chairman of Kian Smith Trading & Co. And we've been talking about gold refining in Nigeria and, of course, West Africa. But that's our show for today. Thank you so much for being a part of it. Remember, you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of Beyond Markets on our website. That's CNBCAfrica.com. You can also stay engaged with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther Awoniyi. From myself and the team, it's bye for now.